Hey everybody, welcome back to the channel. Today I want to go over the AM Silver Bullet for Wednesday, August 23rd. When it came to the charts, we are in a buy model of the market maker buy model right here. Price came down. Here's your smart money reversal, and we're coming back up. We're just closing that out. Now there are another more highs up over here that we can aim for. This new week opening gap here. So it's not like it's just a time to reverse. You know, we're open to the idea of it going longer, and just gotta have price action tell us what it wants to do. Okay. So the first thing that I know that we have a 15-minute fair value gap right here. Okay, and when it came back up, it hesitated. And now it broke through it. Okay, so it closed above. So now that becomes an inversion 15-minute fair value gap. Okay, so for me, I will take this as a long entry if it comes in here to go higher and try and get 5 handles out of it. Okay, and then see how price is reacting. Aiming for these highs over here and potentially some of these highs and imbalances up here. So aiming for higher prices. Okay, I'd like to see it respect this and bounce off. So that's what I'm looking for. So if it comes down there, I will buy 2 orders right there, and we'll see how it goes. Okay, I'm going to go candle by candle, and so I may not get the best fills based on trading view and the closed candles instead of limit orders like I would be trading live. So. Alright, well this one actually gives me a perfect entry, so when I buy 2 there, it's actually where I'd want to be. So that's perfect. We'll put our order on here. We want to go underneath this by a tick or 2, so I'm going over by, half a handle below. So we're risking literally 2.25 handles, aiming for, 3 to 1, 1 to 3. See what we get here. It's only 2 handles, so I'm only aiming for 6.5 handles, 6.75 handles. So let's see. On this, I probably wouldn't take a partial, but if I did, I'd take one right here. So let's see how it goes. Close above, yes, okay. So we can take one off because we closed above this high right here. That's where our partial was. So let's mark this on here, so you see it. Price size partial's taken there. Alright, my stop is now at break even, plus 1 tick. So let's see how it goes. And I gotta have a candle close, or if it wicks like that, I have to take whatever that is. I gotta flatten it there because that would have taken us out. So we're closed here. Okay. So what does this leave us with? It also left us with a fair value gap right here. So I'm still wanting to aim for these new week opening gap. This is what I'm still trying to aim for. Again, if we remember, we zoomed back in. That's what we're aiming for, these new week opening gap over here. But that's what I'm aiming for. So if we come back here, I will, buy 2 again. I'm still trying to go up here. Why wouldn't I just hold this till get to the new week opening gap? Well, I like to get in and take my money out, and then if I wanted to hold it, I really want to switch down to the micros and trade more contracts so I can take partials along the way and let a couple riders stay along for the ride. But right now, since I'm trading the minis, I want to get in, get out. If I re-enter, then I again take partials and my normal trading. So if I'm going to hold for the long duration, I'm trading the smaller contracts, so like the micros. Anyway, if it comes back into this fair value gap, I will buy 2 more. Okay, perfect. We're going to buy 2 more. And let's see here. So we bought 2 there. Here's our long position. Again, here's 1 to 2. This one was 1 to 3. We got it. And then I start doing 1 to 2 because I don't really know how it's going to work out. So where would I take partials? I'll take partials above this, about the 60 to 70% range. So, and I'll move my stop to break even. So let's see what happens here. All right, I will take one off there, and let's move my stop to break even. Trailing stop. So that's where my stop would be. So if it closes around that, I'm gonna exit the trade. Okay, so we're so close. For me, I'm usually moving this up to the nearest swing low, which is right here, so right there. Alright, so I'm flattening there, I'm getting out there, because that's where I would have got taken out right there. So that's a partial, and then a little bit in profit. That's all that was. So that one's done. Alright, if it hits this again, am I taking another entry? No. I'm not. I would like to see this high get taken out. Oh, wow. Had I taken another one, it would have gone back up right there. It would have had a nice little retracement. Please. So it did just take this high out right here. Yeah, I'm not a fan of this price action right now. It's just ranging in this range right here. See how we're going up, we're going back down, we're going back up, we're going back down, we're hovering here. We'll see if we keep what happens here, but to me this looks like it's if it leaves to go down, we're going to go down for a little bit. If it goes up, we're going to go up. I'm preferring to go up long because I still want to see the new week opening gap being targeted. But if it comes down, we're going to have to deal with this inversion fair value gap still, because it obviously held here. I would like to see it break and then use it as resistance. Yeah, this is just ugly price action. When I start seeing this, I start seeing this as like a balanced price range. So I'm going to throw that on there, balanced price range. So as ICT has mentioned before, think of a paint roller. Paint roller going up, it leaves behind little inefficiencies, right? Volume imbalance and little things. Price comes back down, fills those back in. Again, leaves some more some inefficiencies in there. Price comes back up, fills those in. We're just going back and forth and back and forth and back and forth. If it leaves, then this would be, I wouldn't expect this to be traded back into. If it leaves to go down, I wouldn't expect this to get traded back into. So high to the low, we're in this range. We're just kind of going back and forth. So you're just going again, up, down, up, down, up. I'd like to see us leave it. There you go. There you go. Finally, we left it. Okay. So we sold here. There's a fair value gap right here. Okay. Still targeting this. So from here to here is 6 handles. So that's good. Ooh, could have got in right there. So what do we call that right there? Institutional order flow entry drill. That's where it just barely comes in. Let me see. Just barely wicks in. Doesn't go to consequent encroachment. Okay, so that's a good sign. We don't expect it to come back in here. It also had left on. I'm going to zoom in way in here because I want you to see this. Okay, it's very close. You won't see this very big. Okay, there's a volume imbalance right here. Okay, I'll mark this on the thing so you can see this volume imbalance. This was an entry we talked about in a Discord group that I'm in, and I want to show you this, why this worked this way. institutional order flow entry drill right here, okay? We have a volume imbalance. And this is where that candle closed at the volume imbalance. The very next candle, okay? If it closes downward, we're sitting on our hands, okay? You can, but as soon as it leaves this volume imbalance to go bullish, you can get in, okay? Because it's a volume imbalance entry order, okay? If it opens even, if it trades down, you can enter and go long. If the next candle opens with another volume imbalance and then fills this in, you can get in here and then go long. We're not expecting this to be traded into for two reasons. One, we have a balanced price range below it. Okay, so we don't expect this to get traded into. Institutional order flow entry drill came in here, just wicked in here and left. Okay, so we don't expect this to get traded into. At least not half a consummate encroachment. So if you took a trade, you could take your trade here and have your stop in the middle of this if you wanted to. Or even safer one would be below the fair value gap because we don't expect it to get traded into. Okay, so the very next candle where it opens is very important. Okay, so it opened one tick above, okay, at another volume imbalance. Then it was closed in right here, right? So that's where we're going to buy. We're going to buy right there. Okay? Right there. And we would have done right this volume imbalance right here is where we would have entered, but we actually entered there. Your stop can go to the middle. I would just have it, here. Okay? So let's zoom back out here. Okay. Now, I don't know if I would take a partial, probably somewhere in here. If it closes up in here somewhere, I'll take a partial. So, you see how, I should have kept zooming in. We closed this volume imbalance in the blue candle where we entered, okay? The very next candle opened with a bullish volume imbalance. Closed, okay, I'm taking this this position off. Closed at the top, next candle started here and closed one tick below, okay? Let's just see how this goes right through it. And that would have taken us out, so we're just going to flatten. There, it would have taken us out right there. If not, it'd take us out there. So, see how the rest of the week here, the rest of the hour goes. All right, let's get rid of this. Okay. Get rid of the positions, and let's see. Do a recap. We came to the charts and we saw that price was bullish. We had a 15-minute inversion fair value gap was just created, so we wanted to see if we could hit that and go long. We took our entry at the inversion fair value gap, 15-minute, and we took a partial and we got out of our trade at 2 to 1 or 1 to 2, right? We left behind a fair value gap. We're like, hey, we're still shooting for the new week opening gap. Let's go long. Let's try it. We took an entry. We took a partial above the high, and then we are partial above the high, and then we moved our stop, and we ended up getting taken out a little bit above break even by a handle or two, handle and a half. We did not take another entry here, even though it would have kind of worked out the same way. We didn't, but we saw that this was kind of like a paint roller, which was up, down, up, and through. That's a balanced price range, right? That's a balanced price range. Okay, so then as price left it aggressively, it left behind a fair value gap, and we had institutional order flow entry drill right in there. Just barely comes right in there with a tick or two into the fair value gap. That is institutional order flow right there. Okay, that's signature. It left behind a volume imbalance, and when we had another volume imbalance, the next candle, we got in on the volume imbalance. Okay, because we knew the price was most likely not going to trade back into the balanced price range. And because of institutional order flow entry drill, we know that it's probably not going to go back into the fair value gap. Price is going to leave quickly, going to leave. So as it filled in the volume imbalance, price left aggressively and hit our new week opening gap. Okay, so those are your three. Really, two played out well. One was partial with a break even. But those are your Silver Bullet trade setups for Wednesday, August 23rd for the AM session.